Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we're looking for a finished three-wave corrective structure, looking for an impulse to the upside to continue the bigger trend. In this case, locally, we want to see a finished five-wave impulsive structure in wave 1 and then a three-wave corrective structure to the downside in wave 2. If we pull a fib from the low to the current high that we have, then the common target for your wave 2 is between the 0.5 and the 786, 61k to 56.7k. The higher price goes locally, the higher the target for wave 2 will be. If we look towards the upside, then currently we did find resistance at the daily level here, but we have some more additional resistance to the upside in case we move up 69.1, 69.7 and 70.8k to 71k. Inside this wave 1, we are then looking for an impulsive five-wave structure to the upside. If I go to the 4-hour time frame, then this is the bullish scenario where we have an unfinished impulse to the upside in a 1 2 1 2 3 4 5 4 and then one more leg towards the upside in a wave 5. In this case, locally, we want to change the market structure, move above 68k and start an impulse 1 2 3 4 5 to the resistance areas that I mentioned above. The support area is this blue box over here. That is the target area for your wave 4 in blue. The wave 4 in blue is a higher degree wave 4, and a higher degree wave 4 tends to retrace to the price section of the lower degree wave 4, which is the white wave 4. So this box is taken from the high to the low of wave 4, and as you can see, it is touched. Now we still have enough room towards the downside, but eventually you do want to see that wave 5 to the upside, 1 2 3 4 5, and preferably we actually don't lose this level over here for a reason I'm going to talk to you about in a second. The invalidation pretty much for this scenario is price moving below the previous wave 4 range at 63.2k. After this wave 5, we then finish that green wave 1 and look for a bigger move towards the downside. Now the reason why I mentioned that preferably we don't move down too far is because of the point of control of this range. This volume profile is taken from the first red candle on the left to where we are at the moment, and what you can see is that we had a deviation moving outside of the value area, moving back inside, and now we are above the point of control. It was resistance for a day, and now we are attempting to flip this as support and of course move towards the upside. If we can stay above this point of control, then we're good and the probabilities are higher for price to move to the upside, looking for a wave 5. But if we start closing daily candles below this point of control at about 66.9k, it increases the probabilities for an impulse to be finished and a bigger move towards the downside, which is then represented in the scenario that I have here for you. In this case, we then have again a double 1 2 1 2 1 2 3 4 5 4 5, finishing your green wave 1, looking for a bigger retracement to the downside, a three-wave corrective structure in a wave 2, most commonly a zigzag, hence the reason I put a 535 zigzag on the chart, and after wave 2 look up for 3. Common target for your wave 2 again, the 05786, 61k, 56.7k, minimum target to 382, 62.7k, and you don't want to hit the 886. That is very rare for a wave 2. The most bearish scenario is a three-wave corrective structure to the upside in an A, B, C. Now the probabilities for this are very low at the moment. If you take a trend-based fib extension from the low to the high of A to the low of your wave B, then your wave C went all the way to the 2.618, which is a much higher probability for a wave 3, or in other words, an impulsive structure to the upside compared to an ABC. For this scenario to get any higher probabilities, we really need to move down significantly and eventually move below the low over here at 53.5k. Looking at the CVD divergences, we had bearish CVD divergences earlier. These played out as price moved towards the downside, taking out this low, and then we started to also create the bullish CVD divergences that you can see on the chart over here. After these bullish CVD divergences, you can see some more bearish CVD divergences over here, which become invalidated if price can move towards the upside. And the target for this bullish CVD is the high here. For the bearish CVD locally is the low here. Now, what is important and what I personally like to keep an eye on is the local CVD divergences on the 5 and 3 minute chart. Because as you can see, we have on the 15 a bearish and a bullish CVD divergence, which are like countering one another. So what I like to do is look for more local signs of strength, and what I like to look for is a structure to the upside, higher highs, higher lows, and a continuation of bullish CVDs locally. You can see we had a bullish CVD here. This one already played out, and we want to see this continue, preferably price moving above the high here at about 68k. And if we then finally look at the probabilities of the different scenarios, then on the daily time frame, the probabilities are highest for the bullish scenario, where we have a low in a wave C and look for an impulse to the upside. On the number 2 spot, we have any bearish scenario, but price needs to show a lot more information before the bearish scenarios become relevant. On the 4-hour time frame here, the probabilities at the moment are highest for an impulse to the upside, a 5-wave structure, looking for wave 4 and wave 5 price action, and eventually, of course, we then look for a retracement to the downside in a wave 2 in the bullish scenario for a 1-2 and continuation to the upside. Now, the point of control that I have shown in this video does play an important role. If we can hover above the point of control here, then the probabilities increase for price to move to the upside and look for a wave 5 at some of the resistances that I mentioned earlier. If, however, we lose this point of control at about 66.9k and flip it for resistance, the probabilities increase for a high to be in then a wave 1 and look for a bigger retracement to the downside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.